Hi, welcome back to the channel. Instead of selling your house and buying a new one, rent it instead. I've been licensed for over 5 years, sold over $7 million worth of real estate. And in this video, I'll show you exactly how you can qualify for a new house while keeping your rental and maximizing your investments. Before we get into how you can do this, let's talk about why you should keep your rental property instead of selling it. The main reason is passive income. If your rental is cash flowing, that can help you qualify for another house. The second reason is long-term appreciation. Real estate in particular appreciates by 5 to 8% each year. The third reason is tax benefits. Depreciation and other tax tactics can work in your favor. Now that you know why you should keep your rental property instead of selling it, here's how you actually do that. Rental income can offset your mortgage. Most lenders are allowed to use 75% of your rental income as your total income. Remember to have lease agreements signed because that's how you prove you have rental income. Tax returns and history. If you own the rental for over a year, you're gonna need to provide the lender with your tax returns. But what if your current property already has a mortgage? Here's how you navigate that. If you still owe money on the house you would either want to convert into a rental or is already a rental, lenders are gonna look at your debt to income ratios. Before you panic, you have options. Option one, if the house isn't a rental yet, convert it to a rental and use that extra income to offset your debts. Option two, cash out refinance. When you buy another house using the equity of your current house. Or option number three, you can do a HELOC, which is a home equity line of credit that's usually just for the down payment. But what about the actual loans that I can use to buy a house? Let's go over those options right now. It all depends on your situation. So I'm gonna go over different types of loan programs that are most commonly for different types of situations. And if you see the one that's yours, you can say, that's me, okay. I think that'll help me. The conventional loan. Best if you have strong income and a lot of reserves. The FHA loans. FHA loans require the smallest amount of down payment. Typically they are for first-time home buyers, but you can have multiple FHA loans as long as they're 100 miles apart. You also have DSCR loans, debt service coverage ratio loans. This is best when you're struggling with DTI and want to qualify to buy based on just your rental incomes alone. Finally, portfolio loans that are best for investors with a large portfolio. Before you make any moves, let's cover which mistakes to avoid. I've seen buyers' mistakes that have cost them thousands of dollars. Here's what not to do. Not having a lease in place. Forgetting about reserves. Underestimating new mortgage costs, especially if you're doing a refinance or a HELOC. And not consulting with the lender early. If you avoid these mistakes, not only are you going to be in great shape to buy an investment property, but you can also keep your current house and start your real estate monopoly. Still have questions about how this may work for your particular situation? Drop a comment down below or call me. If you found this video helpful, make sure to like, share, and subscribe for more real estate topics.